have to answer a question that startups, and the money is easier to get, so startups go to different places, or should we fix that? Is there something to fix that, or is something to let it happen? Different classes of startups. It's really extremely tough to be a hardware startup in India, right? In fact, we tend to bend a software startup into an average revenue per user startup. Should we do that? Is that a reasonable thing to do for the long run? So that's an open question. Also, if you take a foundation, we're working tier 2, we have a very clear idea of what a tier 2 structure may look like. But we haven't really end with this. Investment in top 100 deep tech companies is talking about, right? Going on. Himanshu is here from IP Global Samrit, for instance, trying to do blended finance. So these startups that have a deeper, longer valleys of death can have more options in being more viable. I don't think others have answered it anywhere in the world also. And when it comes to, if you sort of step back and say, okay, where is the money? Where do I have to get it from? So of course, taxpayer is one money, right? There are other people who have a lot of money, but they don't have the facility with either the language or the culture of the modern financial markets. And how are we going to engage them? Do we have answers to, if we want to continue to go from world's third largest to ahead? So anyway, with those, let me just say Bhavjot and Krishna.
Problem and trying to solve it. But what we did is we sort of took a step back and said, there are so many problems, there should be something underlying that can be changed or that can be attempted, which can probably change the structure in the agriculture ecosystem. So what we did is, we looked at it, and what we realized is, while most of the industries, if I want to call agriculture also as an industry, which I would like to, in most of the industries, the production cycle and the buying cycle are aligned. But when you come to agriculture, it's like, the plan for selling already starts when the production is that, in any industry, if a graduate comes out of the college and he wants to get into a freelancer, he has to manage his P&L. He should be aware that if his expertise is actually criminal. So what we are trying to do is that putting both the things to his work without worrying about whether he's going to get the money at the end of the month or not. And then we are tying up with corporates, agri-processing and agri-commerce action. So in that way, what we think is we are sort of changing the baseline on which the whole agriculture is being done today. A farmer can be an employee, he can get a regular income every month, and using that, asking for loan waivers. Most of these problems will be solved by getting into a sort of a corporate farming model. And there's a third equation in it, which is the landowners. There are a lot of landowners who have left agriculture. Maybe the previous generation was doing agriculture and underutilized agriculture lands. Link them up with employed landless farmers on a salaried model, and then perform the production. This is the crux of our whole business model, basically. And we are trying to be like any other industry. You get a demand, you produce against.
It's fascinating. So here, I have, for instance, done a lot of work with agriculture, and I've found that 30,000 is, maybe I should ask a question. Why 30,000? How did you decide to pay the farmer 30,000? 30,000, you said?
The salary, right?
Yeah.
15,000 is typically a very good salary for any person to live in a village. 15,000 is a very good salary. Currently what they are getting, a good salary today. But why are we at 30,000 CPs as per the statistics? Why is it so? Because a farmer is cultivating 3 acres of land, 2 acres of land, 1 acre of land. How much can he generate out of 3 acres of land? So our premise is basically is that if a farmer can cultivate 20 acres of land, let's pull 20 acres of land, give the farmer to cultivate 20 acres of land. And
the land and by making farmers salaried, is there advantage on the cost side of your business? Does it, because in some ways the inputs are inputs, right? So what happens to the cost? Yeah.
I will take a simple example. Let's take the example of tomato. Okay. Typically, if I am doing farm gate production, farm gate procurement, and bringing into the city, maybe if the market is at 15 rupees, I buy it at 11 rupees from the farm gate. But if you get into production, core production, you can produce it at 6 rupees 70 paisa. So on a kg of tomato, while a lot of startups are struggling to save 3 rupees, to make a margin of 3 rupees, as a company, you're looking at a margin of 8-9 rupees. I mean, it comes with its own headache of getting into production, doing all those things. But the point is, that is the point here. You get into the production, you streamline the process, and then you from 3 rupee margin, you can get into 8 rupee margin on 15 rupee MRP, 15 rupees selling price.
I see. And on the demand side, you have a greater bargaining power by...
Yes.
You having pooled, yeah.
Yeah, we have all. How can we be profitable, and make more than 3 rupees so that we can stay afloat? That's when, we saw that, and then now, I mean, it's a bad thing to say, but, you can fight your competition very well.
Okay. Now, so...
more correctly, from gross margin, 40% from farm gate production, you get to 85% on a gross margin level.
Yeah,
in a F&B space.
That's okay. Could be a challenging task for a model like this, right? Is that true?
Yeah, I mean, see, farmers are not used to this model as such. Their lifestyles are a little different, and they run at their own pace. So, getting the initial set of farmers to work like a farm labor. If you're giving me are you treating me like a farm labor is the first question some people ask, and which is not what it is. We are looking at more of a white collar type of a manager for the farm. We have to be one of the first people doing it. Pushing it in is like a challenge for us.
Yeah, I asked that question because in many other domains, like for instance, look at business models for household workers. There was, what was it, Saath? There are people management issues. Like for instance, are there other difficulties with this business model so far? I mean, what are some of your top challenges?
See, one more thing what we are trying to do is that we are trying to make it completely system driven, get the whole process into a system, and get completely into a system driven model is one of the big challenges that we are actually facing. One is that the information, there's a lot of information, a lot of farmers have information, forget about the scientists, the farmers have a lot of information, but collating that information we are trying to crack right now.
I see. Great. Well, I could keep asking you questions for 1 more hour and still be entertained.
I don't mind answering.
Let's come back to you a little later. Let's go to Bhavdeep and talk about health.
Yeah, thanks, Dr. Chintan. I'll first quickly introduce founders at Clinic. My background is that after completing an integrated study from IIT Roorkee in 2012, like a liaison between Total Gas and about that's healthcare, and it was mostly driven by my own developed diabetes. And like so many other families, we only got to know that the situation or the medical condition had progressed to an extent where he had now chronic kidney disease. The family had no insurance. There was no good tertiary care. In Chennai, he was almost for all 8 months, and then post that we were not even able to save him, right? And it was like a huge emotional and financial blow. So for me, it was very clear that, listen, if there is the practical use of technology to change or to bring like a paradigm shift in any industry, it's the healthcare which doesn't really change the way healthcare is delivered, right? So it was very important for me to get there. So I was joined by my co-founder, Dr. Suraj, who's also an orthopedic surgeon, a single-digit PG rank holder, and then healthcare has like myriad of problems, right? Which is the most important problem that you would want to pick as an organization, and how would you solve for it? For us, it was very clear that there are two challenges that we land at a hospital, or run from pillar to post. When you talk about the other biggest problems, India is a young population, and I have done selling of insurance on the ground. Is the 70% of the outgo that the younger population has is not towards tertiary, covers your hospitalization, what happens to their day-to-day medical problems, what happens to consultations, medicines, diagnostics, all of that they have to pay out of pocket. And if you have to buy an OPD insurance in India, first of all, the aspirational expensive product, how do you change that? How do you make sure that a simple man living in my town also gets access to free medicines, free diagnostics, free teleconsultations, free in diagnosing, so many things, right? So that's where clinic's managed care model comes in. We are aligning incentives across doctors, patients, and insurance providers for the out of the pocket. If the doctor has prescribed you a prescription, everything in that prescription is covered. And how is the doctor prescribing? He is getting to a diagnosis and post that possible treatment of that medical condition. For example, if you go with a chronic bronchitis to any of clinic doctors, you get a very standardized treatment. You don't get random 10 medicines just by paying 500 rupees per month like you would pay any other utility bill. You pay your healthcare bill. You get unlimited consults without to pay for it. If the doctor wants you to refer you to a senior specialist, you don't have to pay for it. Even if you're 18 years or 60 years, you pay like crack, and bring a subscription-led managed care model to the industry. And currently we have more than 15,000 families in Bangalore itself in less than 6 months that we have been serving with this product. So yeah, I mean, that's been...
These 15,000 people who are your customers now, what is the profile of these people? What is the persona?
So these are 15,000 subscriptions. It can have divisions that we see in our mind. There are 750 million people who are covered by the world's largest health insurance plan, the Ayushman Bharat. Then you have top 150 million people who have either bought retail health insurance, which Niti Aayog refers to as the missing middle, right? So that is the segment that we are after. So the kind of people who become our subscribers are aspirational people who have small tea stalls with 3-4 people employed, like MSMEs. So these are the kind of people who subscribe to the plans. So the most hit that we have seen is people with household income between 40. They want to buy a health insurance product. Now this is the right product they find, where not only the hospitalization but the OPD also they don't have to pay for.
And when you go to them, what do you say?
See, there are two challenges that they have already. Number one, if they have to start a relationship with the health insurance. Problem number two, health insurance is a very complicated product and it is very restrictive in nature in India. It's not true as you would pay for any other bill. So that the whole jump that they have to make in decision making becomes simpler for them, right? So that's point number one. And point number two, they see that, okay, how many times do I get hospitalized? I don't. But how many times do I have to go to a doctor? A lot. That's what they like about it.
Yeah, no, I think you're thinking that OPD is a market itself is a breakthrough.
Correct.
In a way. So now go to sell their product. One of their major concerns is adverse selection, right? Those who are the costliest would come to you first. Do you worry about that?
We actually, on the contrary, welcome them, because since you are taking so much stronghold into the primary healthcare part, you are able to manage their medical condition. And these are the people who are most frequent users, where you actually make some revenue on the subscription, on the medicines and diagnostics that they have to purchase, right? So not just that you are taking care of their, have great, partnerships with us.
Oh, I see. So here, wait a minute. So your revenue streams are, one is this
OPD limit, which is anyways a generous OPD limit. You get only 30% discounts on the LTV, the lifetime value for us is very high.
These medicines and all that, or is it still per customer basis you are? getting these generics, sir?
So for us, it's very simple, right? Since, again, it's all tech-driven, we know once the doctor comes to a diagnosis, the whole prescription is pre-populated as your centers and actually serve the customers 98% of the times using that just 90 SKUs. So you don't have to do like a retail pharmacy setup. You just, as per the frequency of the medical problems that are coming to you, and that's where technology comes in, enters.
I see. Okay, so now can I ask you more possibly business model-wise sensitive question, which is, what fraction of your patients do you end up paying for?
Hospitalization risk altogether. The only thing which we have to pay for is for the medicines and diagnostics for patients who are in the all-inclusive plans, which even if like 100% utilization is there, we still end up making money there.
I see. I see so much. So let's hear from Ravi. Let's hear the third business model. Then we'll ask some finance questions.
Opportunities, right? Not thousands, not million, but a billion opportunities. Now, what makes me say this? Well, a couple of things we heard, and we all know every problem, every crisis is an opportunity, right? So there are these billion opportunities. I'm sure each one of you at some point in your life had aspirations, dreams, and many of you have actually translated that into becoming entrepreneurs, right? I'm sure this aspiration resides to every Indian to translate that aspiration into action and into reality. I'm sure we'll be a very, very vibrant economy and leapfrogging to probably the world's largest economy. There is an opportunity of $50 trillion economy which is waiting to be created. And eSamudai, my company, creates digital tools, which mean creates digital tools, which mean Chapra or somewhere in Bellary or somewhere in a small town in Telangana business, Paytm-like business. Our digital tools make it in a sentence, we are in the business of enabling entrepreneurs to create digital businesses. So a bit about my background. This was also worked on the shop floor, and I have worked in a manufacturing plant. I have worked in the retail industry, and now in the software.
What if I am a store? Let's say.
Sorry.
If I am a business, an entrepreneur of this sort in a tier 3 town,
right?
What is my?
Created a marketplace, something like a local Amazon, if you will, what we call as L-commerce, right? It's not e-commerce because there is the local presence of the store in that town, but there is also the convenience that the digitized business offers to the customers. So this entrepreneur aggregated the businesses and offered today, and this is without discounts, while paying for delivery charges. Today, one of the e-commerce players out there, any one of those giants out there. My company is the software provider. More he or he onboards onto the platform, we get a monthly subscription of their stack provider. Our revenue model is very simple.
Is an app?
This is. Thank you. Yes, this is multiple apps. It's an app ecosystem. So what we start in the box, it has a merchant app for sellers or merchants or restaurants. It has a consumer app. Monitor which businesses are doing well, how many orders are flowing through the system, what can be done digitally to promote one business if it is lagging behind, what's in every small town and city of India. So there are about 750 districts in India, and we believe that each one of Hyderabad, Delhi or Mumbai or Kolkata, unicorns can come from every part of India. So that's our mission.
Yeah, I see. Okay, great. I mean, how many users do you have at this point?
So far, when I say active, there is a lot of transactions happening. People are using the platform. Orders are going back and forth. but we have covered about 50 cities so there's a gestation period because you first need to take care of the supply side. And once you have the supply side, then you need to bring on buyers onto the platform, and then you create and I said, yeah, so it kind of can evolve into a super app for that town.
Can I ask you one last question, that how big is your team? One, part A. Part B, how many businesses you have to...
58 people on our team right now, and this is including the tech people, the consultants, the interns, all of them. Right now we are staff strength of about 100. We wouldn't need to go beyond that because once having built this, what we are looking at. And I believe if we have about say about 250 marketplaces, we should be...
What have been your experiences in speaking to investors? Are they saying, this is great? Are they saying, what is this?
I spoke last, I think I'll go, yeah. Traditional corporate models, what we have all seen, have been pyramidal in nature, right? So, who does most of the work? The people at the bottom. They do the hard work, the effort. But who has the best view? The person at the top, right? And the pyramid is such the elimination of people from equitable distribution of wealth. What we are trying to do is make it more circular in nature. That we help create are not connected to us in any way. We don't own them. They're independently run by the entrepreneurs. So we speak about this. Obviously, you're going against a traditional system that has sustained for a few centuries. You're trying to change that. So obviously, there is thought, apprehension as to whether we will succeed or not. That is there. But those who get it, and for those who say that and ownership. If you do put in your efforts, you have to be rewarded, recognized, and you get ownership of what you have created. For those who get it, they feel that this is a great way for sustainable growth. This is the way we need to move forward, and it will help create a lot of local to be grown thousands of miles away and transported somewhere. So there's a lot of impact. Those who get it, they really like it. So so far we've done 2 rounds of fundraising, and we have raised...
Typically 2 questions that come to us from the investors. The first thing they say is, why are you diving into the deep end of the sea? Right, it's like, you're getting all the way down into production the farmers can use. That's like the shallow end of the... Investors ask is, are you a social enterprise or are you a for-profit enterprise? When you talk capitalism with conscience, that's it. You make money while allowing others to make money. That's all we are trying to do. These are the two typical questions that we get as. The main thing being the deep end.
The only question that we get is, why do you have to get into the in-person care? Why not just focus on the teleconsultations or the digital care or the virtual care, right? Whereas in India still it goes to a doctor, then it's easier for them to follow up digitally. So I think that's the biggest pushback that we get, that why do you need those primary care small centers that we have, right? Today it's ours, tomorrow it can be. This is the biggest pushback, because it's easier to scale.
Each of you for swimming, and yet many investors, when you touch their conscience, are able to open up to a lot of different possibilities, and I think you are forerunners in trying such things. So thank you very much for your participation in this conversation, and I need much more. We need much more of this experimentation, which I hope the
line. While we talked about emerging business models, it will now be pertinent to start looking at the role of philanthropies in supporting these. And while we do that, this session will be moderated by Sri Madhav Joshi, CEO, India Health Fund, projects between IKP and AVPN. And that, in fact, Arvindan has actually set up the context for all of this. I mean, I'm telling you, the credit actually goes to your organization, because you made us think about impact by Dr. Ashwin Nayak. So I think it's a small world. And one thing led to another, and we realized we need you here as well to share your views on support. If these startups need to get into a social impact space, then they should be looking at how to how to enter into these spaces through agencies which are already present out there. And so with this, I invite you all to the stage and take the con.
So philanthropy is not new to this country. We've got a long history of philanthropy, both in India and coming into India. But the question has always been, how can philanthropy, what kind of impact does philanthropy create? And more importantly, can good be made to do more good? I think the first question, maybe Arvind, I'm going to ask you to kick us off. Given the experience and the work you do in working with funders representing different colors of the spectrum, all towards mobilizing capital towards social impact, has there been an evolution of thinking as well as the hard money that goes into philanthropic funding, from pure grants to more catalytic funding?
Organizing this event and this specific conversation. I represent AVPN. AVPN is a network of social investors across Asia. We have a term for this in AVPN. We call this the continuum of capital, whether it is starting from grants, bridge or debt or equity, whatever it is. The financial instrument is more, it's an instrument, right? For me, catalytic aspect of philanthropy comes from, how are we using this to deploy capital in a way that it is fit for purpose. Three specific aspects that it must address. And it is a little different from how grants are typically thought of. Because in general terms, grants usually, in the origin of philanthropy, it's all targeted either where it's just not a feasible market for the private sector to go behind, or that the government has failed and citizens do not have access to an essential service. But grant has always focused on the service provision aspect of things. And hence, a lot of the focus, especially from the investor side, has been, engaging with people in a contract basis, right? I provide you funding, you provide someone else some. That first part. The second aspect of catalytic is whether it is taking risk. Because according to us and my own experience is that philanthropy has huge, or at least it must have huge risk appetite, given that there is no expectation on capital returns. So the amount of risk one must take when deploying this, or the opportunity cost of not taking risk, is even more in this particular case. And the third aspect is, going back to the first principles, what is the sustainability? Is it exiting into a market-based model, or is this going to exit into some systemic change where government can provide this service? So catalytic capital, to me, or catalytic philanthropy, has to address these three things. Now, it doesn't come at the cost of cannibalizing something else. It has to be in complementarity, but the thinking and the approach, probably this is, my experience.
No, thank you, because I think you bring up a couple of very pertinent points, especially around failure. How have you seen the evolution of philanthropic funding? And do you see different colors of different funders? And maybe you could talk to us about that.
Thanks, Madhav, and thanks to the IKP team for having us here. As Madhav, you mentioned, I currently manage the Samrit Healthcare Blended Finance Facility, which is supported by USAID. And the basic idea behind the facility is that how you can use philanthropic funding to enable more capital for social enterprises who are working for the betterment of ABC area. Right now we are focusing on healthcare, but then the idea is to how we can expand it to other areas. To your question in terms of does philanthropy have different colors? Yes, it does have different colors. Has it evolved? I think it's still evolving. And it evolves with different forms of philanthropy. So if you were to kind of bucket just one in the country, or the likes of Gates Foundation and others which are international. So that's one side of it. And what we have seen there is that they are more risk-taking. They are formed in, or the regulation that governs them. The second set of evolution, and especially when you talk about moving away from grant mechanisms to something which is more sustainable, which is leveraging more of other forms of capital when they come in. And the third is the high net worth individuals or family houses within the country, which is a mixed group, I would say, because there you see both kinds, which is doing pure philanthropy in terms of giving grants as to social enterprises, but in way of, say, equity or low-cost debt. So that's, I would say, is somewhere in between in terms of its evolution. There are both set of family houses working in that area. Also, when you look at this entire piece of philanthropy, and to your earlier question in terms of its catalytic nature, I think we have to always, or the sector overall is changing. We keep reading reports that because of COVID, that 3 trillion figure has gone up. And if you look at both the philanthropic private capital coming in. So I think that's the play that we have to kind of sell going forward and convince the philanthropies that to see more results on the ground in a much more sustainable way, which are sustainable and which outcomes on the ground, and be happy with that. But that's not going to change the world.
Because that really got a lot of experience in this. Would love to hear your experiences on what's worked, but equally importantly, what hasn't.
Thank you very much, Madhav, and thank you to Enterprise Platform. And look across work, that's a powerhouse. I think we want to see more philanthropy. Can we leverage it? Of course we can. It gives great runway for trying to solve for the most wicked problems that we have today. And I think if that runway is there, we can try and find solutions that can be transformational, to the point that Himanshu is making, right? So during COVID, I worked with about 354 organizations across the country. We reached about 15 million people. We raised about $42.6 million US. 75% of that went to the partners we were working with. And we leveraged another 83 million US. Now that leverage didn't come from private sector, because most of the people that I work with, the very, very marginalized groups in this country, are not interesting enough for the private sector, right? So that leverage is actually coming from unlocking government funding, unlocking other philanthropies, unlocking in-kind from, and especially because we're working on issues, and I think when we're talking about impact, we should also be clear, like Anandan is saying, what is that impact in 1 million that Bhavjot was talking about, which is bottom of the pyramid, or the other 500 million that's the missing middle. I think philanthropy is actually the greatest risk taker then, and actually fact that we want all the leverage or the blended financing, all the results coming in one institution. Right? So everybody is looking for this one entity that will be able to deploy, and I think as long as different forms of money are working together for that outcome, and that outcome is being achieved, we will have to accept it, because that's just how this sort of playground is. Over to you.
$30 million, as I mentioned, of philanthropic capital, and that's coming from both offshore philanthropies as well as internal HNIs, and for the first time to do a risk guarantee. But then you had bilaterals like USAID contributing to it in a very, very large way. The INFA Foundation contributing, so those are the larger international ones. From the domestic capital, the likes of IndusInd Foundation, we have IIFL now, and few HNIs who are now showing interest to kind of use their finances. We ourselves are now trying to take it to other areas like agri-tech, clean energy and education. In this entire thing, and to the question around leveraging, is that there's a lot of private sector investment which is sitting on the fence. The market, they do see them as a market, but somehow their risk parameters and their risk appetite is not tuned to be able to invest in those areas. So that's where what we've seen is that this philanthropy is a short-term corrector or a correction mechanism which can be there for 4 or 5 years, but actually does not exist. And that's where we are working towards. And we are in a very short period of 2 years have seen that shift. To give you an example, we 5 crore loan book. So 1 is to 10x kind of leverage. What we have realized is that 500,000 and the 25 crores. So now that with that same 500,000, it's possibly going to be around 40 crores of loan book. So it's about changing the perception of the better than possibly your pure commercial investments with large enterprises that you make, which that what we are at least trying to focus on.
No, thank you, because again, I think both of you bring up funding. And the second is this whole aspect of de-risking, which really raises the question of the outcomes and what are the metrics that you can actually use to represent the different colors of funders that you work with.
Yeah. So I think when we are talking about impact, of course, as what Himanshu is mentioning, the entire initiative has to focus on the same set of metrics. You cannot change metrics for different investors. It's like a mutual fund. You can't ask individual stocks, what's the return, or that, one more capital. That people are able to say, can we agree on these 3 or 4 basic numbers based on whichever sector that we are going after. There is a risk taking risks. We need to measure what have we learned because of this risk. And the learning may be learned from those learning we want to learn from this. Sometimes it might be intended, sometimes it might be surprising, but having a very clear learning outcome is going to be useful. We are this route, like you were saying, okay, we have shown that there is viable business models that exist, so I think the measurement at a systems level, whether it is market or whether it is government or any of the other actors out there, can this actually move into that mainstream larger system? Because ultimately it's a spotlight that one issue might be lost. So that continuity and sustainability metrics has to be charted out. Tell the investors is, look, if you want to be the only person running the show, then it has to be a single donor fund. You choose your portfolio, that's fine. But when 10 people are come together, you need to have a governance committee.
No, thank you. So
make it quick, right? I don't think there is much difference in terms of demand on metrics or product. Whereas I'm not so sure catalytic funders who finds social returns for every rupee that was invested in us. And I don't think that that is necessarily what others are demanding. We don't all come together and agree on them enough. It's something that we do. You will see outcomes in 3-5 years perhaps, but you're not going to see impact in that. And actually our relationships with our philanthropy partners are that long, because otherwise you're not seeing real impact at all.
Engage conversation and hopefully
and so continuum of capital. And while we talk about continuum of capital, I think we now need to start developing a viable impact investment thesis. And for that we have Dr. Shri Muralidharan, who's the founder and chairman of PMI Group, has some really good conversation of Great Four Systems and member of Hyderabad Angels. Again, we've had some pretty good interactions out there. And then we have Ajay Jain, co-founder and managing partner for Silver Needle Ventures. And
thank you, Ambuj. And see, it's a little late in the day. People have been listening to the talks and the discussions right from the morning. What I can see at the back, see, what we'll try, and from Bayre's perspective, we have supported nearly around 3,700 initial grantee aid support that comes at the ideation stage or at the early stage by, let's say, BIRAC and other funding agencies. It's on merit of idea and it's fairly upfront. There is a 10% success rate, but it comes once you kind of stay engaged there. When it comes to raising funds from private sector, like private equity or private venture fund, that is where some people say that we have visited investors more than 200 plus times. Then we got first check. That was few years ago. I think the tractions are improving because the rigor and quality or maybe experience in the ecosystem has also improved. So fundraising by all perspective remains a challenge. Continue raising it till a very, very long time. But for this particular session, we are looking at something called impact investments. So the friends who are here among the startups, can you give us a one-liner or a couple of liners? How do you differentiate between impact smaller?
I'm Satya Kochivatla from Parishodhana Technologies. Having some first-hand experience on creating impact. The impact investment to general investment, the differentiation from my perspective would be, you're trying to balance out the lives impacted positively, which are probably in the relatively bottom of the pyramid, region of the economy, while you're also making profits as a venture. That's an impact investment from my perspective.
All right. Anybody else who is not impact investors or social innovation panelist? Murli is an entrepreneur, built-in entrepreneur, seasoned entrepreneur. So can I ask Murli, here for raising funds for a social impact?
Good evening. My name is more from the failure than successes. And I think that's, Pradeep knows me well for a long time, and I've always impactful. When you say impact, there could be two. You don't look at them as customers, but you look at them as beneficiaries. I think this is the problem in my mindset. I believe, now the question is, how do you do that? Because you're saying bottom of the pyramid, there's no capacity to pay. How do you do that? And I think that's the question we are asking. And I want to tell you my own story. We are now a significantly large, we have impact.
TMI group.
Yeah, TMI group, yeah. Pan-India, we operate Pan-India. Whatever you do, you have to think you're competing with somebody the best in the world. Not somebody in India, somebody not in Hyderabad. So that's a mindset. Any product that we built has always been something better than what anybody has been able to give. Now I'm coming to the social aspect, which is important. I think the context is not the cost of somebody. Typically, you can talk about extraordinary profit. Sometimes happen because of customer. Sometimes you are in the right time and the right place. Some at the lowest cost or a differentiator model comes only from constantly looking at technology, innovating, etc., etc. So what we did in social model, what we decided was our business is actually a business enterprise, a stock, and we found that we impacted 500,000 youth in India looking for jobs. We impacted 2 million people across India who have impacted education and so on. Now all of this we have done as a business, not as a CSR money, not as an impact fund. In my mind, to mature, and therefore you need a longer runway, sometimes we have a capacity to pay from some other business. So I believe in Hyderabad. I happened to listen to the promoter once in a CEO club conference, and I asked him this question. I said, what's your secret? What's your business model? How are you different? And he said only two things. He said, first and foremost, we do research, continuous innovation and research and eye care. Portion, 60%, 65% of people are poor. They don't get paid. They don't pay very marginal amount or zero. We do surgeries very low cost, but we do cross-subsidize low-paying customers. Ultimately, cross-subsidy. So you have to be viable. You have to create a surplus. You have to have the same intensity, whether it is a social enterprise or a business enterprise. You need a social, they are beneficiaries. Somehow I don't like that word beneficiary. They are your customer, employee, whom we are also training. So I think that's a summary of what I want to say. Thank you.
I think wonderfully said, and what Murli also highlighted is that you can create grants for R&D, for example, for LV Prasad, but delivering the low segment. Thanks, Murli, for that. I'll move with this, the social entrepreneurs and some businesses which have created a value and connect with the society. Maybe you can share some...
23, 24 years. I'm an IT professional and I'm from Rajahmundry. And for me, whenever I work with any NGO or any investment, if they talk about impact, I do get with that, where I'm involved. I'm very much involved in the startup ecosystem in Hyderabad. I'm involved with IS. For me, there are two examples I'll give. One is I invested in a company called Dialogue in the Dark. So I'm part of Hyderabad Angels also. So I knew it was an impact investment that was almost like 10, 12 years ago. And I knew that I may not get back the money. He's returned, raised many crores of rupees from the people around in Hyderabad. And he got some grants also from the government. He trained, skilled 3,000 people with disability, mostly with It is a German concept for those people, and he brought that license here, and he ran a restaurant in Hyderabad, Bangalore, Chennai. I think he tried in Bombay and few places. He was doing very well. He used to visit the Dialogue in the Dark.
I think this came in media also. In Delhi also, media, I remember seeing.
He actually has to close down the operations and all that. But he almost ran it for 8 years very well. I'm part of another organization called Truth Labs. This is the only NGO in the country, retired as a forensic head of the United Telangana Andhra state. And then he started this NGO. I've been part of There to Go. And he's been providing to the government, to the police, to the judiciary, and a little bit of corporate. So they have been somehow managed to sustain, though he has invested in capital. I also donate to some-time employees, and it's able to pay its salaries, everything. It's sustaining. So right now, just Murli mentioned about LV Prasad. So I am again getting involved and all like. Because if I don't cross-subsidize, this probably model after Dr. Gandhi will not sustain. So we are now trying to see how to sustain this model beyond Dr. Gandhi for next. So Truth Labs gives one of the best forensic service in the country on par with the state labs. Even some of the NIA cases, beneficiaries are, I'm giving a low-cost service, treat them as a client, where you have to provide the same quality of service that you provide to anybody else in your seminars for last 10 years since I'm aware of it. And many funds are now come in impact who are actually came very aggressively in agriculture, health, and education and all that. But for me, it is the environment. You're not destroying the environment, you're improving the environment by green technology or by recycling, by improving the quality of the human, and also the seeing way. You're all seeing now the wooden spoons everywhere and all that. So you can see small changes. The plastic straws are going away. We are seeing. So anyway, thanks a lot. Thanks, Manish.
Thanks, Pradeep. I think you brought in funding, and the operations is one challenge, and capex investments, as Murli mentioned, can be catered through different provisions. But I think the end of the matter is like a business is business, and quality and the rather than saying beneficiaries, the customers need to be brought the same quality of
I just want to add one more thing. How many people think that is the same thing? Today is a small business, and someone mentioned in the earlier panel that they're from Assam in tier 4 town. You can order, and the government has to play a very active role. And I'm happy that ONDC, Open Network of Digital Commerce, will create those impact at a grassroots level across.
Sometimes I want to touch one of the points that some business require low investments to begin with. For example, Parishodhana value. Let's take another example. There is a company called Voxware in the building, not like at the being so heavy, need to be created space for the ground level, but it can be placed at first floor, second. So let me ask this question to Ajay, who has recently launched a 100 crore fund under Silver Needles Ventures. So low ticket size, within the low ticket size, or would you be willing to venture into that? But what's your discretion now?
From Michael Susan Dell Foundation and Grey Matters Capital. My main differentiation on something like the double bottom line impact versus, let's say, what today I am doing as a VC fund, right, as they're made to, and I think they should be not so tight also between impact investment and a regular investment. The only thing I feel is the efficiency that I see. Coming back to the main question, our outlook at any startup is whether the startup will grow, right? And whether it will grow multiplying the money. Outcome for me, which is great. But for me, the question is whether the startup will grow and whether it will have the ability to multiply the money, right? Especially from a Silver Needle Ventures perspective, the SEC, DE classifications, right? Now that was a very different approach. And now if you ask me, that approach might be I was force-fitting something. But we'll have to debate a little more to understand what's really happening in the social space.
All right. Okay, you want to add something? Go ahead, Murli.
value at that stage because they need a sustainable business model, multiplier, whatever he talked about. We are not sure. And I'm doing exactly one project like this, so I want to share what I'm doing so you'll understand. I'm working on a project called Digital NIOS, children outside school right now. Because of COVID and other factors, these children have dropped out of school significantly. So we have said, okay, how do we develop a technical solution because these children cannot go to school? Digital school. So right now, we have developed a business model, which is a cross-subsidy model with a front-end grant model. Right? Income children paying for the free children. These are all free. 70% of children are free, especially in CSR. You'll be surprised to know. And the backstory to this is, in the last 4 years, 5 years, I've raised 14 crores as a grant for one of our IIM Ahmedabad Alumni Association. It will kill you. You cannot pay back. You cannot get equity investment because they will not see a value. But the interesting point is, if you go with the business, people are willing to give you money at that time. You can't be a profit-making entity and ask for it. Obviously, it has to be a Section 8 company. But I think you can raise anywhere between 15, 30, 40 crores if you really got a very interesting project which is tested and viable. Of course, payment will come in installment. You don't need all the money front, right? You need a commitment. Because of the digital technology and the methodology we're building. Money is available. It need not be impact, it need not be debt.
I'm reaching out to Ajay and Pradeep again. So one is CSR. If you were wanting to make some tractions or MVPs are there or early revenues are there, but you want to still scale and you still require, how would a startup identify a potential impact investor? Do these investors typically shine on their social media or wherever that we are open and we are willing to take this extra bite, little bit as possible in black and white, or as Murli is saying that if you can convince with a viable plan and impactful projections, you can sell your business, you can make a pitch.
So I'll give my input from there, then I'll let Ajay add it to it. There's no question about that. The funds are available. There are a lot of HNI funds are available also. And they're not looking at any particular IRR that I should get 25% returns and all like. What they look at is whether this person can actually really do the business. Available for the people who can sustain, who can scale, and who can really make it at least a value add. And there were 2 students from IIT Delhi. They were selling, do you know what they were doing? They were actually removing stammering. So the people who are, moment they finished their present, and they were doing a great job because one of the students also was stammering. So he came up with an idea. So stammering can be fixed. It's like it already reached out to 200,000 people in the world. Some for free, some paying some money, because he was touching every part of the world, Africa to USA to India and all like. Enough money from wherever he went earlier.
Some he got from Barrack too.
So, okay, some he got. Okay, you're aware of that. So I don't think there is a shortage of funds.
I don't see a dearth of funds at all, and I see there are a lot of people interested in the space. Space might be people not look at it. I think the approach should be to get to the right people with the right pitch. Right? Let's say if I am from a district in Rajasthan and I'm clear that storytelling has to be right. I think the storytelling is most important in this space. Yeah.
Okay. So just to quickly summarize, committing towards impact innovations. You want to?
I just add, we just recently for one of our school project, we did crowdfunding. We raised money. You have to come across as an expert. You can't be a novice. This is what I have a problem. Where is the expertise to scale up? You need to demonstrate expertise. So when I go in front of investors to raise money for, not for my company, I'm talking about NGO, which we are more part of it. They look at my face, look at what I have done for my company, whether I can say I have. So I'm presenting the entire IIM Ahmedabad Alumni Network as my friend. And I go there, right? It's a question of storytelling. The story has to be told, but you also should be able to...
Question from a different perspective. So one is in the investor community, more often than not, we have seen that investors do not have that comfort zone of particular subject area. So regardless of the attractive propositions, they kind of hesitate. Am I committing to the right technology, right product or not? I'll give you an example. For instance, carbon net zero is a global issue. 2070 is what we have committed. We have committed to them. Europe has committed 2040, carbon net zero. Greener solutions aligned to this. Replacement of non-renewables like plastics, right? Replace the plastics with bioplastics, biodegradable solutions. Now, a startup who can bring up that solution, which is deep technology, but and the investor who has money. Now, the technical expertise is sometimes it becomes a roadblock, like the other person cannot communicate. Besides